I decided to do this video to clarify my view on the market as I did my two previous videos. I said a hard landing, why a soft landing is wishful thinking. But then I had a video before which says the bullish case for stocks, and many of you actually got confused on where I'm really standing in this whole thing. Is it maybe a new bull market, or do I still believe the stock market is gonna somewhat crash? This is what I'm going to cover in today's video. I'm gonna go over some, technicals. I'm gonna go over the bond market and some, couple of other areas, and for me to give you my conclusion on what's really happening in the stock market, and if we could even reverse, or maybe this is just up from here every day, and this is maybe another some type of a new bull market. Now, in my previous bullish case video, we talked about the stock market. We talked about the indicator of the golden cross, which is the 50-day crossing above the 200-day, meaning the blue line crossing above the yellow line, and we can see this has happened and it has been sustainable. The S&P broke above the channel and it made a higher low, and then it's going up. And then we had the CPI, which was a little bit hotter than expected. The market didn't care. We had the PPI, which was also hotter than expected. The market also didn't care, and we are going up anyway. Now, normally, whenever you have such behavior in the market, this is a pretty, bullish in terms of, technicals. But again, this is still on bad fundamentals, which I'm going to cover more, in this video. But so far, we have to respect, the way the market is really reacting to this whole thing, the strength of the market. I honestly believe that it would reverse on the CPI whenever investors' perception actually changes. I was wrong on that. That actually didn't happen. I thought maybe the next day this would, change around. It also, clearly didn't happen. And it looks like, some type of a bear capitulation phase where all the people that made bearish videos are, quitting and are not doing that much stuff anymore. And again, I don't blame them because the price action is, again, pretty bullish, and we have to listen to those technicals. So while the stock market is going up, something is pretty interesting is actually happening in the bond market. The 10-year actually broke out of the channel. It was trading within a channel. It actually broke out of the channel as the yields are actually going up, which is bearish for stocks. The 2-year, which people believe that, you have to watch the 2-year, and if the 2-year is going down, which is approaching, the Fed funds, that would mean the Fed is going to pivot soon. Well, there's no Fed pivot inside if you look at the 2-year, which is actually going up massively over the past few days, and it's going up today, and it keeps going up on those inflation data, which tends to believe that the Fed's going to have to hike more. So while the bond market is actually speaking a very different language, and the dollar held its key support around 101 and is starting to go up, meaning it's still, an area of strength. If it drops below 101, then we can make an argument that the dollar is done. Now, if we look at this whole thing, we look at the stock market going up. We look at the dollar is actually going up. It's holding up. We look at the 2-year is going up. We look at the 10-year is actually breaking out. It's also going up. This, to me, doesn't really, make sense in general. And there's a message, I believe, that the bond market and the dollar are actually sending to us, and we have to listen to this message. And my interpretation of this, message, and especially looking at the 10-year minus the 2-year, is something really bad is going to happen in the future, but not right now. The technicals are saying that now the market is bullish. Now the market is likely going to stay flat or is going to keep going up, like I said in my video when I said the bullish case for stocks. This is what the technicals are saying. But the bond market, the way it's breaking out, the dollar holding a key support, and you have the 10-year minus the 2-year, again, it's inverted. But the real pain never started until it went back into positive. This is what happened in 2007. When it went positive, we had the big crash. We had, the pretty things break in the economy. Same thing in the 2000. Always, whenever it goes positive, this is when the real pain begins. But now it's inverted, negative 81 basis points. It's nowhere to actually turning positive. So if you look at the signs of the bond market, how it's very far from turning positive, and you look at the sign of the technicals in the stock market, how the 50-day, cross above the 200-day, how you have this technical pattern above the the channel, how we made the higher low, it's saying that the market might go a little bit higher. It might go around 43.20 maybe. This is the latest high of the August high. It might go to 43.20, and maybe then, it could actually reverse. But what everything is pretty much saying is, yes, now the trend is bullish for stocks. It's bullish for the stock market, even if it's on bad fundamentals. But the bond market is saying that, yes, now the music is playing, but it's eventually going to stop. But it's not going to stop sometime soon. So again, maybe the market's going to keep going up. Maybe the market's going to stay flat. But eventually something bad is going to happen, and something will eventually break from all the Fed tightening that we have barely even seen the effects of all the tightening that they actually did last year. And with inflation being sticky, as I talked about in my channel, they're going to have to break the labor market. And if they have to break the labor market, they're going to have to raise interest rates higher for longer, which again, the market is not pricing in. So I don't know for how long this type of a clown show could continue in the stock market, and all those meme stocks actually, going up. I don't know for how long it would continue. But again, what this is telling to us is that, yes, the trend is bullish, and we're likely going to either keep going up, or we're going to stay flat, or maybe just do nothing for a few months. But eventually, in late 2023 to early 2024, something bad is going to happen that, again, people will say that, yeah, no one saw this coming. But again, the bond market have seen this coming, but investors were complacent, just like they were complacent in 2020 to say, yeah, inflation is transitory, just like they were complacent to say that subprime was contained before 2008. Now they are complacent again in saying that this time is different, and the bond market doesn't matter, the yield curve, doesn't matter. But again, it's speaking trouble. And a lot of people, including myself, were talking about the possibility of us having a very bad first half and a good second half. Well, it looks like the opposite is actually playing out, where we could have a very good first half of the year and maybe a very bad second half of the year. So looking at the market, again, adjusted to inflation, maybe the market did, actually bottom, although it's pretty hard for me to believe, as it would be the first bottom before a Fed pivot. It would be the first bottom, before the VIX hits 40. It would be the first bottom before the yield curve inverse. And to me, it's just, again, it's not making sense at all. But this is, again, what the stock market is saying. This is what, the technicals are saying. And the longer we stay above this bottom, the harder it will be for us to make a new 52-week low. But if I had to guess on what could potentially happen, is I would say we either, keep going up, maybe touch 43.20 and then start going back down, and then something bad happens in the second half, which no one knows what could potentially happen. But again, this is what the bond market is saying. We could then maybe go down, and then the market maybe, wake up to all the bad fundamentals that we are trading at, and maybe we can go back to 3,200 and make a proper bottom as the Fed is actually cutting rates and not actually hiking rates like they are doing right now. This would be the ideal scenario of what normally happens in those bear market and in the stock market crashes. But again, my conclusion from everything, from the bond market, from the stock market, from the dollar, is that the market is likely gonna keep going up, or is likely going to stay flat for a while until something bad happens. We don't know what it is, where the market would wake up to all the bad fundamentals that we actually have, and then we could retest, the lows, and then, the bear market could end. So what I'm doing in my portfolio is, again, I'm keeping my long-term position. I have a short hedge on the S&P 500, 6 months, type of spreads, put spreads, and I'm doing a lot of other things to actually, collect some premium in the options market, as this is a pretty good market to actually collect some type of premium on key technical type of stocks, as if we go up or we stay flat on the S&P 500. There's pretty good option strategies that I have been implementing since the market has, began going up in pretty much October, November, to actually generate some pretty good returns for the portfolio and for the people, in my group. And this is really what I'm doing. I'm just, staying a little bit cautious on the sideline, trying to watch the market and see what happens, so I can really determine if I should be more cautious or if I should be more aggressive. But looking at the bond market, which is much smarter than the stock market, it's telling me that I should not be, aggressive. So this is, again, what I'm doing. And this was my thoughts on the market in this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.